Welcome to Bears in Exile. Today is Wednesday, November. It's not November. Ha ha ha. Maybe I wish it was November. It's February the 15th and it's Wednesday. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, XOY, XLF, GE, and whatever else happens to come our way, the NASDAQ. Okay. Really good day in the market today. Almost down 100 points with the Dow. Um, just wonderful. Here we are with the Dow. We had a downtick today. It was resolved intraday. Now, the only thing that I don't like about today is it would have been great if the candle had closed below the bottom short-term moving average. That did not happen. We did get below it, but we did not close below it. But anyways, I'll take it. And beyond that, 14-day RSI moving average ticking down, stochastics ticking down, CCI ticking down, RSI ticking down, MACD ticking down, MACD histogram ticking down. It looks like it's finally time. With any luck, we'll have another down day tomorrow that will confirm the move down for a bar retest. And yeah, that will take us close to the bar. So in which case we will have the middle Bollinger Band do the crossover and get above the short-term moving averages. We do want to see that. That will also help confirm. But regardless, very, very nice. Moving on to the NASDAQ instead of SPX. Because we've been saying for forever and ever and ever, and look at all these green days, this is what's been holding up the market all by itself. Well, today's red. It engulfs the candle from yesterday, bearish. We have the downtick, bearish, giving us a target of 28.90. Nice. And I mean, we're just so extended here, so far above the upper price consensus level, so far away from the bar. Just a bar retest will be a really nice move down. 14-day RSI moving average. It went sideways today. All this time it's been ticking up, ticking up, ticking up. Even when we had downticks on other things, we were waiting for this to level out, and it finally has. That's good. Now we just need a downtick. CCI ticking down, RSI ticking down, still overbought. Getting the bearish cross of the MACD and downtick to the zero on the MACD histogram. Very nice. Finally, a little bit of weakness. Now tomorrow, if it shoots off to the moon, that'll really stink. But I mean, this is the most encouraging setup we've had in quite a while. I mean, back here we had red bars, but we had the 14-day still ticking up. So it is changing. SPX. Yep. Very nice. It's not bearish engulfing, but we did get a downtick. Downtick was almost resolved, just shy of 1340. And beyond that, 14-day RSI moving average ticking down. Stochastics ticking down, CCI ticking down, RSI ticking sideways, bearish cross on the MACD, and downtick on the MACD histogram. Very nice. It'll be interesting to see if there's any buying at the upper price consensus level. Hopefully it'll just crash right on through it, but there should be definitely have some purchasing at the major price consensus level. So hopefully we are going down for a bar retest. It is possibly a day early, but tomorrow we should know really well if that is the plan. The VIX, very nice, very, very nice. Yeah, it didn't close at its highs, but that's okay. Nice giant green candle. CCI getting high, fast stochastic getting high, slow stochastic still pointing down, 14-day RSI moving average pointing up, MACD ticking up, histogram ticking up, RSI ticking up, and yeah, we should have some slowdown and resistance in the long-term moving average bar. However, we did close above the major price consensus level today. That is very important. We haven't done that since way back here, which was the 17th of January. Very, very, very nice. We want to see that slow stochastic turnaround, and once we do that, everything is in alignment. So off to do battle with the long-term moving averages. Very nice. TNA. Oh, look at that. This one's been going hand in hand with the NASDAQ. This one started having some problems. Um, going into last week, we were happy about that. We had that downtick resolve itself on Friday of last week, and we wanted to see what happened after that. And it's taking its time, but we have a bearish engulfing today. Nice, big, solid red candle. Yeah, there's a little bit of a tail at the bottom, but still not far away to get a close below the lowest short-term moving average. And we've been saying that going in for a test of the 200-day moving average is completely normal, natural, and should happen. 14-day RSI moving average ticking down, finally. Downtick on the CCI, down on the fast stochastic, not the slow stochastic. Down on the RSI, down on the MACD. We noted the bearish cross yesterday. And the MACD histogram. Very nice. Okay, X or Y. Yeah, that sounds like a plan. When oil is bullish, the market is bullish. We like to say that. I like to say that. And sure enough, it went down today. Market went down too. Could have been much weaker, but so we still have more to see out of oil. We did get a downtick today. Downtick gives us a target right about 1297, and 4 days to resolve that. 14-day RSI moving average ticking up. That is not what we want to see. Stochastics are mixed, down on the CCI, up on the RSI, down on the MACD histogram, downtick on the MACD itself. Looking for a bearish cross. So there are some mixed signals here, and it does look stronger than the other charts. So we do want to see this further degrade, and I think that we will with the downtick. But it would be great to see this go in for a bar retest, which would coincide with the upper price consensus level for this month. XLF financials. You don't have a real rally unless you have the financials. Financials are having problems. We had the downtick resolve itself yesterday. Continued weakness today. Looking for a cross of the middle Bollinger Band above the short-term moving averages. Downtick on the CCI. Downtick on the 14-day RSI moving average. Downtick on the stochastics. Slightly up on the RSI. Down on the MACD histogram. Down on the MACD. We have the bearish cross. This looks great. Lines up just perfect with the major indexes. We like that. UUP. Oh yeah, look at that. Now for the move that UUP has had, we should be much lower in the markets already. So it becomes a question of, is the dollar line or are the markets line? I think that the markets are line. We closed above the flatline long-term moving average bar, which has collapsed. We thought that it would come in and get sucked in earlier, but it did not, and now it's finally getting around to doing what it should be doing. We have a ways to go before we hit the the major price consensus level for this month. And when it does get there, there should be some sort of a pause, but getting sucked back to it is completely natural. CCI very high, stochastic still pointing up. 14-day RSI moving average, we've been watching this one and noting over the last few days that it has not turned. Today it leveled out. How about that? Hopefully we'll see it turn up, and then we can really see some movement in the dollar. Uptick on the RSI gain above the 50, up on the MACD histogram, up on the MACD, and we have the bullish cross, which we noted last night. FXE, the euro. We had said back here that developing into a double flat line, it would be entirely possible. And it may not even get to that. How about that? That's great. We had a wonderful sign today in that it closed below the major price consensus level. The first time it's done it since way back here, the 31st of last month. 14-day RSI moving average, slight tick up. How about that? We want to see this level out. We want to see it turn. Unlike UUP, it's not done that yet. Down on the CCI, getting too oversold. Down on the stochastics, down on the RSI, getting below the 50, a good sign. Getting the bearish cross on the MACD, and a downtick into negative with the MACD histogram. So, except for the 14-day RSI, which could turn anytime now, this looks really good. And hopefully it won't stay pointing up, and then the double flat line actually will happen. It'd be much better to be ejected from the bottom of the long-term moving average bar and let it reassert itself. But yep, being below the major price consensus level, great sign. All right, moving right along. GLD, the second VIX. Yes, it's a red candle today, another hammer, but you'll notice that it did gap up. So I mean, this was a positive move. 14-day RSI moving average getting a downtick. Mixed on the stochastics, sideways on the RSI, up on the CCI, sideways on the MACD histogram, and sideways on the MACD itself. We've talked about the push-pull effect of the dollar versus fear, and that fear should trump the dollar when push comes to shove. And I think that that is evident today with the move up. Even though it was negative, the dollar was positive all day. No wonder why it went down and it was red. But regardless, its position is up, not down. So the interesting thing about this is fear should be increasing, and we have the 14-day RSI moving average getting a downtick, with the secondaries being mixed in the other places. What do I think is going to happen with this? Well, we could have further downticks in the 14-day RSI moving average, but let's say that the fast stochastic and the slow stochastic both turn around and point up. All the secondaries become in agreement and start pointing up, start their march up. The 14-day RSI moving average, even though it will tick down some, could then reverse and remain locked in the upright position. That is what I'm looking for. SLV, very similar, slightly more negative. We have a bearish engulfing today. 14-day RSI moving average ticking down, stochastics mix, CCI ticking down, RSI ticking sideways, down on the MACD, down on the MACD histogram. This is poor man's gold. It is silver. Its relationship to fear is not as great as gold. Thus, I believe that's why it is weaker. But in the end, I do think that it will turn around. Maybe it'll go down for a bar retest first. Maybe it'll even get slightly below that and touch the major price consensus level from the previous month, just below 31. But regardless, in the end, this will follow gold. All right, how about GE? Yeah, get a further read on the Dow. Oh, look at that. Big red candle closing below the major price consensus level for today, backing off of the long-term moving average bar, which is very strong. Looking for that cross. Oh. All right, sorry about that. So closing below the major price consensus level for today, very good sign. Down on the CCI, down on the stochastics, down on the RSI, down on the histogram, down on the MACD, down on the 14-day RSI moving average. We've been watching that one for a while now. And so yeah, this does not look good. It does have the long-term moving average bar to contend with, which should slow it. But regardless, this does not look good for the Dow, and that's good. And I think that'll be it for tonight. Hopefully tomorrow will be just as good as today, but we won't know until tomorrow. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.